What's up, everybody? How's everybody doing? Let me turn this light on. Wait a second. This light's a distraction. All right. Now, a lot of stuff I want to talk about. I got a lot of stuff I want to talk about. Big things. Big things. By the way, if you watch these videos, I know a lot of you came over to me, you caught on to the MMT stuff, and you caught on maybe to the MMT Trader Report, which I write because you happen to find this channel. So I'm happy. I've been getting a lot of emails from people because I asked people, like, how did you find me? And a lot of people have found me through this YouTube channel. So that's great. That is great. Thumbs up for that. Now, for those of you who have not signed up for MMT Trader, I give a lot of information here in these video broadcasts, give you a lot of insight, a lot of information, but the real stuff, the real analysis, the deep stuff, the recommendations, that's all in MMT Trader. So you might want to just check that out. 30-day free trial. You can get all the back issues. Go to pitbulleconomics.com. All right, I just wanted to say that. Now, I mentioned a couple of weeks ago, and for those of you who have MMT Trader, I've been talking about this in the report. I've been noting the very high levels of, or the rebound, I should say, in crude oil inventories. I talked about distillate inventories at a record, all-time record high. I talked about the rebound, very sharp rebound in gasoline inventories. I've been talking about refinery inputs of crude. That's, refineries use the crude, right? They refine that down into product, and the inputs, that's actually a barometer or a measure of refinery demand for crude, like how much crude are they using to put out product. Now that's been going down. I talked about imports, which have been moderating, although in today's report, we're up at a high again, so that's interesting. Talked about exports. Exports now at a 3-month low. Don't forget, a lot of people don't know this, but the United States is a net exporter of refined products, and we're starting to export a lot of crude too. I think we have a net surplus with Latin America. So interesting, because that only took about a year since Congress authorized the export of crude oil. That was prohibited up until, I believe it was 2015. All right. So I've been noting all these things as somewhat bearish. I mean, the market was at a high, and remember, I called the bottom last January it was about 31. We traded down, I don't know, maybe to 27, 26, but that was the bottom. It was hysterical. And again, I called the bottom of the sell-off back in last August when we traded down from about 51 or 52 all the way back down to 39. We were long. And there was an episode there that I have recounted several times about somebody who was at the time, a subscriber of MMT Trader, and he kept berating me, like sending me emails. You got to use stops. You got to use stops. I mean, that's where the term stop loser came from this guy. And I didn't use stops because the fundamentals, the MMT, the fiscal flows, everything was telling me. And also prudent management. There are ways to manage risk without stops. That's what I teach, okay? Sure enough, I made a very nice profit on that. That guy went off into who knows where, probably back to loser land. So anyway, I called that bottom. And the high here, I always said that we're going to get, probably back to between 52 to 55. Last week at 54, I sent out a recommendation to sell crude. Here's the other thing. And by the way, you don't get this anywhere else. You don't get this kind of information anywhere else. You get people guessing, and sometimes they're right, but they don't give you the real deep understanding and rationale. You have right now a speculative position in crude oil, a net long position, which is an all-time record high of almost 380,000 contracts net long. Remember, when I say net, that's open longs minus open shorts. So that is a huge. That's 380 million barrels of crude. That's a claim on that much crude. That's big. So you look at this speculator. And by the way, the speculators were similarly very, very short last January 2016, and then again in August 2016. So if you want to cast your lot with the speculators, be my guest. But that is not going to be a winning proposition over time. It might be a winning proposition for a short period of time, but not for a long period of time. So it looks like we can get a washout in oil. And then we'll have to see. We'll have to see what's going on. And what I mean by that is we'll have to see with respect to how's the economy doing, how's demand doing, how's the inventory situation doing. But by the way, today, or maybe it was yesterday or today, I saw an article that Goldman Sachs now coming out talking about not just the high inventory levels in crude, but the fall off in gasoline demand, which they called a shocker, the fall off in gasoline demand. If you go to my website, Mike Norman Economics, we have that article posted up there. And the analyst at Goldman said the year-over-year decline of now 6% year-over-year. In the analysis report, it was 5.2%. But if you look at the inventories today, at the weekly petroleum status report today, 6% down year-over-year gasoline demand. Goldman said there was only 4 times in the past since 1960 that has happened. And every one of those times has been associated with a contraction in personal consumption expenditures. Why is that important? Because personal consumption expenditures is by far the biggest component of the economy, of GDP. It doesn't contract. It hardly ever contracts. It goes up. Sometimes it goes up a little. Sometimes it goes up a lot. But when it contracts, unless there's some big offset somewhere else, like the government's really, really spending a lot, okay? Or businesses are spending a lot, or foreigners are spending a lot, which we know is not happening because the trade deficit is worsening. That's another way of saying foreigners are net saving, okay? This PCE contraction, that's recessionary. Goldman said it. That's recessionary. So number one, I call that one Goldman. Everything you get in the MMT trader comes out before, even the big boy, the big boys, right? We have the people here, some of these zombies and mousy boys and parrots who talk about the big boys. The big boys, they know what the big boys are doing, Mike. And I had that one guy. I buy and I sell at the same time because I know what the big... Okay, good guy, good. What else? Gold. Here's another great story, right? Well, I stayed long gold. My position's almost back to break even. I've had it on for a while, but again, it cost me nothing in time. I can pay with time. Guess who's buying gold once again? Stanley Druckenheimer. Yeah. Now, in the past, when Stanley buys or sells, I usually do the opposite because he seems to be very, very out of paradigm in terms of his understanding of the monetary system. But this time, I don't really see him as a contrarian indicator for the simple reason that the gold participation on the part of speculators, in other words, their long position in gold, is not that big. And again, the numbers I give you in MMT Trader, I'm not going to do that now. And finally, there's stories starting to pop up all over the place about, hey, the dollar rally, it's unraveling. What happened to the dollar rally? Well, again, who told you that was going to happen? Who told you that was going to happen? All the interest rates are going up and the dollar's going to go up. And believe me, folks, when I tell you this right now, even if the Fed raised interest rates tomorrow, which they're not going to do, but even if they did, let's say it was a surprise rate increase, yes, the dollar would go up for a couple of days, but you want to short it, it's going to go right back down again. Because, why? Many of you understand this now. You talk about rate adjustments. You don't say rates are going up or rates are down. You say price setting. Price setting higher, price setting lower. In the case of cutting rates, price setting higher. In the case of raising rates, higher prices means what? Inflation. Inflation means what? Your money is worth less. If your money is worth less, it does not manifest in a stronger exchange rate. Okay, it's very easy. I mean, how can you not understand that? If your money is worth less, do the foreign exchange markets equate that or cause that to reflect in a higher exchange value of the currency? Of course not. Your money's worth less. Very simple to understand, folks. Very simple to understand. All right, that's it for this video. See you later. Bye-bye.